What's up, everybody? Real with Omar. I'm here with a special guest, owner of Prudential Borrowing, Eric Forte. We've been talking constantly behind the scenes, so I'm just kind of rushing us to get back to talking on camera. Eric, thanks for being on the show. How are you?
Absolutely, Omar. Thanks for having me. It's a pleasure.
So we've talked about boat clubs. We've talked about the state of the market. Where do you want to start? First, let's talk about you. How long have you been in the market?
I've been in the mortgage business 23 years now. Prudential Borrowing's been open since 2008, so that's we're coming on our 16th year, I believe.
That's the meltdown, guys, just in case you didn't remember that. In 08, the worst time in America to open up. He said, you know what? I'm opening a business here, right?
Yes.
Yeah.
Sort of along those lines. You know, it wasn't quite as organic as that. There's a lot of background things that had happened. And basically, I had a partner at the time, and he didn't want to work for anyone else ever again because our previous company had melted down. We were at a broker shop at the time.
You were an AE at a time or never that?
I was never an AE. I was always on the direct consumer side.
All right, okay.
Pretty much most of my career on the mortgage brokerage side.
Okay.
I was a correspondent lender for a couple of years, or mortgage banker, however you'd want to,
However you want to make that sound.
Yeah.
Right.
Absolutely.
That's an inside joke.
Different people call it different things.
Yeah.
Mortgage broker side, and actually the mortgage broker side is, not to jump ahead, but it's picking up drastically. We're now 27% of the overall mortgage market again, which hasn't been since before 08 times,
right?
When a lot of mortgage brokers had collapsed in those times. And we're really picking up market share because consumers are realizing that mortgage brokers are getting lower interest rates, less closing costs, better customer service than, let's say, retail institutions, or mortgage bankers or correspondent lenders, however you want to word that again.
Right.
And now has the loan officers flocking to our side.
Okay.
So, it's not like each individual loan officer here is doing way more loans. We're actually doing quite well for an industry that's been slow for the last 2 years. But loan officers are just flocking from retail and correspondent because of the lower rates, quicker turn times, the technology on our side. I'd say 10 years ago, we were behind retail and correspondent. We're now
on tech.
Yeah, just on tech.
Right.
Now we're way beyond. Because as loan officers move to our side and our side grows, it's brought in third parties in the tech side that want to build.
Opportunity, right?
They see an opportunity to build better tech and make money, which
Right.
they're doing, and the tech has been fantastic. Well, I think you've seen our system arrive.
Yeah.
Which for an LOS is groundbreaking, in my opinion. I have never seen anything.
Absolutely.
That's
But I think I make a lot of statements on social media. I'll bring this one up. I said, if the tech is great and the rates are great and everybody's ready, but you're not ready to work, it doesn't work, right? It doesn't work unless you work. So that I just want to make that statement because, we can make it sound as nice as we want to, right? But at the end, there is some work behind it.
That's tale as old as time. I mean, I bet there were two people, not on a podcast, of course,
right,
but talking 50 years ago, 100 years ago, sitting around a table talking about, it's not going to work if people don't want to work.
Yeah.
There was probably, oil tycoons building,
right.
building oil back in the early 1900s, late 1800s, saying the same thing. You need, obviously, work ethic and all those kinds of things to be successful. Now, if anything, it's becoming a little bit easier for someone who doesn't have that overt work ethic to still succeed to some level, because you don't need, with technology, you don't need people support.
Right.
People support's expensive.
Right.
Technology support is generally lower cost, so you can actually engage. We have loan officers who do several closings a month. Bigger producer loan officers, and we have loan officers who close a loan every other month. Who, one of our loan officers is an accountant. And he has his loan officer license.
So it's not his main thing.
It's not his main thing, right.
But
he's able to offer great rates and products to his clientele as an extended service now.
Right.
So, on the broker side, since we have those more plug and play availability, it's a great opportunity for people who are just doing a couple. And it's also a great opportunity for people who do 10 plus closings a month because you have, just like I said, like you said, great rates, great tech, quick closings. What else could a consumer want?
Right.
Or a loan officer.
Well, usually somebody who's like, in my experience anyway, the relationship supersedes everything. So you have a good relationship and you give great service. Now you're untouchable, right? People will walk over 4 other loan officers to come back to work with you because the experience was so good.
Absolutely.
And the customer experience or client experience, I think, is paramount.
And I don't want, anyone in any industry, in any part of our industry can do that. I obviously, I think Chase and Wells and Citibank are probably the worst places to be a loan officer at, but some of the best loan officers in our industry work at those institutions. Because again, if you have the work ethic and you're going to put forward everything, you're going to succeed, regardless of where you are.
Right. And you have that machine behind you. You have that brand behind you that you have to build, right?
But see, they're a little bit more old school in there. If you are a big producer, you can get that support at an institution like that. The plug and play, that's not going to work there.
Right.
If you, I would say only the top producers can be, have ultimate success at an institution like that.
So you've seen a lot of loan officers come and go, maybe not through your institution, but also in relationships passing by, right?
Of course.
What would you say is a common denominator where you see, all right, this guy or girl is really going to make it? Or, all right, he's good for one a quarter, one every 6 months. Or do you see something definitive off the top, or is it simply you can't tell?
It is a combination of things, probably the same in your industry or any sales industry. There are people who have the gift of being personable and talking and meeting everyone. Right away when you see someone.
The personality type.
When you see someone at a restaurant, or you see a waiter or a bartender or someone in the service industry, and they've got that flair, they've got that vibe, and that they got that glow, and they love to talk. They're going to be natural at sales.
They love bringing people in, right?
So there's a bit of that of who's going to be, ultimate success, but not everyone has that. There are, different people who are successful. Some are just really personable. Some are very thorough. Some have great work ethic. Like, hey, they don't have that. Where they're going to go out and they're going to meet several people because they talk to every person that they run into. There's also the natural, like the people who are just hard workers and they do great jobs for their clients and they follow up with their clients and they answer post-closing phone calls. They get a call in 2 years from now. I actually just got an email this morning from a client we closed in 2022. I believe I looked it up just before, with a question about they had some late fees on a mortgage statement. And, that's customer service. This was a file with NewRez, though. And NewRez is one of the lenders that supports brokers. They actually put my name on the mortgage statement every month.
Nice.
Hey, if you have questions about mortgages, reach out to Eric, And so he emailed me and he asked about these late fees. And he's like, I never paid my loan passes. So I'm like, hey, for privacy laws, we don't have access to that information.
Right.
The servicer is now NewRez. You have to call customer service there. Right. But if any questions pop up or you need help with anything, you let me know. I can even jump on a 3-way phone call with you with them. And, to be quite honest, I don't even remember the transaction.
Right. Right. Well, they had a relationship with you. Just don't know exactly the details of it.
But I'm happy to help. I'm happy to answer. And listen, I don't know what that leads to. This person might be talking to a coworker in 3 weeks from now who's buying a house and say, hey, call Eric.
Well, that great service leads consideration. Right. I talk about that all the time. Marketing leads to consideration. Doesn't mean you're going to definitely ROI it, but it leads to consideration. You get that call. You get that. Let me ask him. Let me see. And then what you do with that.
Top of mind always also.
Absolutely. Absolutely. So if you see people that are, or clients that I've seen other LOs, and this is a quick snip. Hey, listen, man, I like what you got going on. I want to do the same thing. I'm like, great, man. Wake up at 4 a.m. Do this. I give them the whole thing. I was like, and do that for 10 years.
In the gym at 4 a.m.
and 10 years, 10 years, and you'll be right here.
Yes.
No. What's the faster way? I was like, you don't have to do exactly what I do. I said, but I say this all the time, right? The results you seek are behind the work you're avoiding, right? I was like, you have to do this. Like, well, nobody knows me. Well, you have to get known.
Yeah.
I was like, and the bigger thing, especially for the younger generation that I see, is that they want to be known. I'm like, what do you want to be known for? He's like, what do you mean? I was like, well, if somebody calls you and has a question and you don't know the answer, then you're not professionally available. You're not professionally prepared. Have you been preparing? Oh, I never thought about that. I was like, why are you not thinking about that? Because if you want to be an authority, you have to know shit.
And it's, well, so when you're new, right, you have that, the fake it till you make it kind of, you have to, that's what you have to put forth. Or honestly, I think for any newer people who want to get into the business, who are in the business but are not authorities yet, as you put it, they should work for a team. And this is whether it's real estate or I'm assuming commercial lending,
or anything,
like in your industry, or residential lending, because you're not an authority yet, and you don't have a past book of business of people asking you random questions about their loan from 4 or 5 years ago that you could be top of mind.
Right.
How are you going to be top of mind if you haven't done transactions, right?
Right. What do you want to be on top of mind for?
You know,
right. That becomes the question.
Yeah. And, you know, it was a little bit different perhaps 20 years ago because it used to be, hey, you're great on the phone. We're going to put you on a phone.
A redundant.
Give you 2,000 names and numbers, and you're going to call until you're dizzy, and you're going to speak to people, and you're going to get in touch with them, and then you're going to bring the lead to someone, you know, a loan officer who's, you know, or a manager who can structure and do things along those lines. And, you know, that's changed obviously a bit.
Back in the day, it was either there's a sale being made on the phone. Either you're selling them or they're selling you. Right, and that's it. That's
an old sales line.
That's an old sales line. Yeah,
a movie actually.
But that's what that's
Glenn Ross line.
No, Glenn Ross line is no. It's not you. It's not the lead. You suck.
The leads don't suck.
Yeah, you suck. Right.
And coffee's for closers.
Right. Don't touch it. All right. Let's talk about one thing you talked about earlier that got my attention. A boat club.
Yes.
What exactly is a boat club? Now that I heard about it, I'm kind of curious.
Oh yeah. So well, you had mentioned that you are doing a speech on a boat.
Oh right. And you asked what kind of boat?
Yeah.
And because it's not a rowboat, it's a yacht.
So if you want to plug your upcoming
yacht
speech,
social on the 21st, Chris Works, so many different people will be on there. Financial literacy at its best. You know, you'll be on a boat in the water with people that can answer questions that they can't run from you.
And what better way to become an authority than
hang out with
education?
Yeah,
absolutely. So yes, I was mentioning. So I'm a member of Freedom Boat Club.
Okay. What exactly is that?
It's a public club. You know, as long as there's membership available, people can join. And instead of having a boat, because I've considered for years of getting my own boat, and I've been a member of the club now 5 years, and I love it because it's a monthly fee. So I guess one of the negatives is that there are fees throughout the year, even though our boating season in New York is short. But you can go to Florida.
Okay.
They have boat clubs all around the country. You can go to any of them. You can use boats anywhere. So I was in Detroit for a conference. I didn't use it, but they had on the lakes there.
It was available?
It was available,
okay.
Yeah. I was too busy and,
so
I catch a flight.
So what is it exactly?
So you basically, you're a member of a club in the Long Island market. They're not available in New York City because of insurance reasons, I believe.
Okay.
But they're in Connecticut, New Jersey, Long Island, upstate New York.
Now Westchester?
Lake George. Westchester has one going off the Hudson as well. Okay. I forget the exact spot. I've been wanting to do that to kick it down to the Statue of Liberty.
Nice.
I've done that out of Port Washington. So I'm on the South Shore. Okay. So if I had a boat, my closest boat club is in Freeport.
Okay.
And which is maybe like 10 minutes from here. And if I was to have a boat, I'd have it in this area. So if I wanted to go out of Port Washington, it's not happening. I'm not going to trailer my boat up to the North Shore,
right?
Just to drop it back in the water to then go there, or to Westchester, or to certainly not Detroit.
Right.
So you have access to these boats all around, even the world. They have them in France as well.
Okay.
So you have access to these boats. It's a membership fee, a monthly fee, but you pay for gas, but there's dock hands. You know, I go with my wife and kids, and they bring our stuff down to the boat. They put it on the boat. When they're done, they bring it back.
Are you the captain of the boat, or
I drive the boat?
Okay, so you drive the boat, right?
I drive the boat.
So you have to be pilot. You have to have a license, right?
Yeah. It's actually, funny enough, that's only starting this year.
Really?
Previous to this year, you did not need a captain's license to captain a boat.
Wow.
I've had mine for several years because for a jet ski, you did.
You did.
So I had a jet ski several years back, and that's why I had mine already.
I think Lorena just learned that.
But you do need one now in New York. So
okay.
You do need to get your captain's license, put a little anchor on your driver's license.
Oh, is that what it is? Okay.
Yeah.
Okay.
Yeah. It's a boating safety course. It's one day. You can take it online now.
You don't actually go on a boat and do anything?
No.
Just I want to educate you.
Yes. You don't need to go on a boat or do anything, which is
weird.
Yeah. Perhaps worrisome even. But yes, no, it's you do need that, and yeah, you can take a boat out.
So how big are these boats? Just for
that is the only reason I might get a boat myself. They're no cabin boats, so they're like 20.
So what's a
they're
cabin
like
boat?
20 to 24 foot. A cabin boat is where you can like have like a bedroom and like a kitchen and a bathroom.
So these are smaller boats.
These are smaller boats, either center consoles or dual consoles, up to like 24, 25 feet are the max.
Okay.
The pontoon boats might be a little bit bigger if you take a pontoon boat, but yeah, they're really just daily cruises or fishing.
Right.
People are into fishing. A lot of people go and take them out into the ocean and fish.
Right.
So
they're like short trips.
Yeah, it's a day
cool.
trip.
Right. Okay.
It's a day.
It's almost having like a convertible, right? You use it sometimes.
Yeah.
Right.
Yes, but I have so many friends with boats, and their boats are constantly being fixed.
Yeah.
Or maintained, or there's an issue, or you're not just ready to go. When We have boats that go into maintenance, and I get a little message, either a text or an email, that say, Mr. Forte, your boat is in for maintenance, but we just moved you to this other boat.
Okay.
Have a great day.
Right. It's like leasing with a lot of cars.
Yes.
Yeah.
It's, they have like a car club. It's similar.
I've heard the two things you remember about having a boat is the day you buy it and the day you sell it.
And
that's it.
Every day is great when you're just a member of a club and you don't have to maintain it. You don't take care of it. You don't even have to clean it.
Right. How hard is it to set up? Like, is it an app?
To
reserve your boat.
To reserve a boat. Yeah. So yeah, there's a website works on your phone and on a computer. You just go on there, you reserve your boat. A boat could be reserved already.
Right.
Like, weekends you might want to book a week or two in advance. Right. Weekdays are almost always available. It depends on the market you're in.
Right.
Too. We have several in Long Island, so I think they don't fill up as fast.
More inventory, right?
Yeah, more inventory.
For those that are aspiring, pay attention. Right. Like you can be on a boat, right?
You can be on a boat
because everybody's always looking for the next experience.
Yeah.
Right.
Yeah.
Have you ever jumped out of a plane?
Never jumped out of a plane.
It's a good experience.
Don't plan on it.
I did it last year. It was good.
Maybe when I get to that level where, I need to experience something different.
Well, it was my son's birthday, and he said, I want to jump out of a plane. So I was like,
that would make me do it.
I can't let you go by yourself, bro.
That would make me do it. Yes. Yeah. Something along those lines. Because I have no desire or like,
Oh, you think I did?
How was it?
I was like, oh, that's a great question. It's very cold. First of all, when you go up there and they open the door and the wind's coming in. And it's kind of surreal because it's very quick, right? You go there, they give you like a 20-minute protocol. Mm-hmm. I mean, obviously I was, I think they call it tandem.
Tethered or tandem. Yeah.
Yeah, somebody was jumping with me. So you're there and, you go up and there's a whole bunch of people in the plane. And then the people that are doing it solo, so the back opens and you hear the wind and you're like, all right, it's cool. And then you look back and you see all these people missing. And then you look outside, the plane, people flying in the air. And then you start sliding because you're all sitting on this rail and you can't stop. So once you get to the door, you're looking down at earth. It kind of hits you. You're like, fuck. And
they're just...
Then they push you out. And that's it. Tremendous pressure.
Is there any... I changed my mind.
Nah, because there's people behind you. And then I watched Mission Impossible this weekend. Yo, Tommy Cruise, man. Tommy Cruise.
Jumping out of planes.
So inadequate, bro. Like, deep sea diving, jumping out of planes.
It was submarine stunts, yeah.
Bro, he's definitely a man's man. All right, wait, let's get back to the topic. All right. Today's New York City's multifamily state of rental stabilization. How do you feel about it?
So, the rent stabilization part in general, I'd love to get your take on this because this is way more your market.
It's horrible. Go ahead.
We'll
get to my opinion.
From the landlord side, right? Yeah. Of course. But so I think there's a need for something for whether it be rent stabilization or some security. And just for anyone listening that doesn't understand rent stabilization rules in New York, there might be people out of the New York. What are they talking about?
Yeah, what are you talking about?
In the New York market, we have very strict rules on 6-family and up that have rent stabilization, which means if a landlord has a vacancy and the rent was $1,200 from the previous tenant, if a new person comes along and they set their rent stabilization to 2%, they can't rent that place for more than 2% more than $1,200.
Right.
Which becomes a problem when you have massive time of inflation like we had over the last 2 years. And I think it's causing problems. From what I'm hearing, there's lots of units sitting vacant because a landlord might come into, hey, the last person wrecked this place. It's going to cost $60,000 to renovate.
Yeah.
And if my rent can only be $1,300 when the market rent is $3,000, it's not worth it for me to renovate. I'll let it sit vacant and claim the loss.
Yes.
Which I think is making New York City's housing problems worse.
Yes.
We have
exacerbating the current
thousands, tens of thousands, if not hundreds of thousands of people who need units, but units that are vacant.
Right.
But we have hundreds of thousands of people who need a place to live.
Housing, right.
And there has to be, something's going to break.
Yeah.
And it's going to break, and I think it's going to go towards, and this is my part, and I think I have a solution for it.
Okay, let the people hear.
Because I don't think anyone wants to hear a little old lady who's been living in a place for 20 years, and her rent is $1,200, has a landlord come along and go, I'm raising your rent to $4,000, and she's now out on the street or wherever, right? No one wants to hear that.
Right.
Issues with gentrifying a neighborhood, issues with just that person, that's an issue. Mm-hmm. But what I don't understand is when a new tenant comes along,
brand new relationship, right?
Person leaves.
Yeah.
The unit's now vacant. Let's use the one that needs $60,000 worth of repairs.
Mm-hmm.
The rent stabilization laws currently don't let the landlord charge the new relationship, the new tenant, market rent.
Yeah.
Why?
Yeah.
Who's that
Well,
help?
what was happening before, about 4 years ago, I think they put a stop to it, was what landlords would do, they'd buy a building, and they'd buy out all the tenants. They re-update everything, and it would break all regulation. And
You still can.
Right.
You can still. It has to be 80% renovation for mine now.
So that's what I saw a lot of people doing. They're buying people at $30,000, $40,000 a unit, and then updating the market thing.
Yeah.
Brooklyn. That's all of Brooklyn. And I did a lot of lending in Brooklyn. What happens now on the real estate and the lending side, not to get too boring, but cap rates, right? Cap rates are basically the income on a property. It's how you evaluate a property, right?
I always, for a layman, I consider a cap rate, best way to explain it.
Yeah.
It's your interest.
Okay.
If you're getting a 4% interest rate on a savings account, your cap rate on a building is that.
Okay.
That's what your return is on the building.
Okay.
Obviously, it's way more complicated, but
we'll use his thing. But I'll just say that people feel that like when they're trying to sell, now it's becoming an issue. Valuations are coming back. I don't want to use a bad word. I'll use I'm gonna say skewed, right? Skewed, right? You know what I wanted to use, but when I use it, it's very skewed because now you can't think of it in that straight white and black. Like these are the numbers. This is how it works. I've had valuations at $2 million get taken a look at again and come at $700,000. So that's the type of experiment we're broken up, which is crazy, right? Which is crazy.
Now, I had a question for you too. Where does your lending fall into the place? Are you helping the person who goes to that Flushing savings bank and that valuation comes in drastically low? Is that where you step in?
No, I mean, you mentioned them, so I'll mention them.
We're not going to talk about specific bank.
So Flushing,
Flushing
great bank.
We actually broker to them. So.
Yeah, me too. But incredibly conservative, and that's fine. But you know how they say it, he who has the gold makes the rules? Basically, if they don't like something, they come back conservative and they'll rip you. And what I mean by that is how much money they're gonna lend you, they chop it down. And at the end of the day, they're like basically saying, take it or leave it, right? So I fall a little between.
So they have great rates and great, great closing costs.
I think they have great rates and great closing because they can control their box, right? Where they control their portfolio, right? They have the gold, right? Exactly. So where I fall into it is maybe the person who's owned their property, is trying to, get ahead or eschew their income on tax returns where we don't need tax returns, we use bank statements and alternative ways of lending. So the interest rate is a little higher, but right now all interest rates are kind of like within each other. There's you can't go to one place and be, oh, that's crazy, because they're only maybe 100 basis points off of someplace else.
The way it's definitely the same in your industry, but if we're going to be in a declining rate market, which is what most likely everyone's hoping for, most economists see as well, is that rates will be coming down over the next couple of years. What's your interest rate today matter? Like you're going to have this for 2 years. When you're in a low rate market and you're talking to a client, then it's a little bit of a different story when it's like, well, you're going to have to refinance in 2 years to get into a different program, as opposed to now when it's like, well, you're going to have to refinance in 2 years, but you're going to refinance in 2 years anyway.
Let me say this. I think that the current state of homeownership is a little, they're a little bit lost in the matrix because a lot of people bought during COVID, right? Or right around over or before. Yeah. So they thought I was like, when interest rates come back at 2:00, I'm like, 2%. I'm like, oh, the next pandemic, bro. When are you going to forecast that, right? Or now, it's 7% right now. I was like, that's what it costs. That's what it costs.
Also, these are people who got into the housing market in the last 3 years. They know nothing else. Over the last 25 years, 6% rates are. That's a normal, healthy rate of life. That means the economy is doing well.
In 86, interest rates are 14, 16%, and that was baseline.
Because in 86, there was a problem the opposite way. There was inflation. There you go. High inflation that stuck way longer than our inflation stuck.
Correct. So you have two guys that are talking about stuff they know about, so it gets we get a little geeked out about it. But the thing is, it depends on where you got into this market. When did you start investing? Oh, right after COVID. Oh, so you're expecting everything to be 3%. I was like 6, 7%. When I got into it back in 04 or 05, I think 7, 8, 9 was kind of where we were at.
Yeah, depending on the loan. I think your conventional loans I started in 02, but 03 is really when I became a loan officer. Your conventional loans were in the 6s.
Right. Then there was that wave at 4.8 where everybody thought, well, this is great.
Yeah.
And then the meltdown came and then FHA came and saved the day, right? They lent.
And rates dropped into the Ford.
Right. And they lent 70% of the market in America.
Yeah.
It was crazy. It was crazy.
The government know we were 70% FHA back then. I didn't know the country was. It makes sense because Fannie Mae and Freddie Mac at that time were
going for conservative.
They were retracting and they were going to conservative.
Yeah, it was a mess. It was a mess.
It was a mess. So they were getting taken over, and now it's quite the opposite. Now we're talking about them going public again.
Right.
So who knows what that brings?
Right.
A lot believe that might actually bring higher interest rates.
And that's a 20-year swing, right?
Yeah,
20 years. So between 10 and 20 years.
Yeah,
we've been around, guys. We've been around. Sorry, it's data's like that, but we've been around. We've seen a lot of shit.
Yeah.
So when the pandemic hit and we were still essential, and I was like, well, on my side, it got scarier because a lot of my paper dried up because a lot of commercial lenders were like
pulling back.
So what I had to do, I had to flip into more private. And when I say private, I mean more proprietary money, meaning just me and a group of partners that we would pool our own money and lending in our own leverage. And then when it started opening
it later.
Correct. A lot of bridge lending. And
and I think a lot of investors were scared at that time too, right?
They shut down.
Yeah.
They shut down. It wasn't like
even like real estate investors. I'm saying.
Some guys, but I luckily
I didn't though. What a great time to buy.
Luckily, the guys I was with, we were moving. So in 2008, during the meltdown, do you remember Implodometer? That website? He remembers.
Of course, I remember that.
So we used to go to his website, right, to see who went out of business.
New banks every day.
People would go to closings and call for funding, and the bank would be out of business. That's how crazy it was, right?
Think of it, we spend a month and a half getting a loan clear to close, underwriting, sending in conditions, income, appraisals, title reports, and then we say, congratulations, Mr. and Mrs.
You're good.
Your house closing is on Monday.
Yeah.
This is Friday.
Yeah.
Your house closing is on Monday. And they get there and they start, signing the docs and everyone's excited. And then the closing attorney calls for funding and they're like, oh, this bank just went out of business.
That really happened.
Actually happened.
That was really happening, guys. That's not the Big Short movie. That's real life.
It happened to clients of ours even.
That's real life. That's
Countrywide went under. It was a couple of them I know.
Yeah.
It was
crazy. So I'm using that to illustrate when COVID happened, the shutdown of banks was overnight. It wasn't like weeks. Like it was kind of like a mess. Like you didn't know where the mess was in 2008. When COVID came, everybody centralized said, no, we're not doing this. We're stopping.
In 2000, the banking crisis of 2008, and I've been saying this for years, when people are like, oh, foreclosures are going to rise, the real estate's going to crumble. No, it's not. The banks learned every lesson they could learn really fast in 2008. It was a mess because banks were still trying to do traditional foreclosures, rather than modifying, rather than talking to their clients.
Especially in New York.
Yeah.
Florida had it down. Florida was getting people out in 5 days. That was crazy. I've heard stories of people just getting.
But the problem with that is when you're foreclosing and getting people out, those units become available, and that floods the market with inventory.
Correct.
And then what happens then? Dominoes. Now the values go down even more.
It's the burning house theory, right? My house is burning, then it burns down the whole block.
Yeah.
Right. Yeah.
Yes. So banks learned that.
Yeah.
Banks learned that lesson in 2008. They did not make that mistake again. COVID hit. They got out the playbook. They just went, we know what we're doing. Whoomp. Everyone who can't afford to pay, you call us, we modify.
Forbearance.
Put the money in the end.
Yeah.
Figure the payments out.
And they got real friendly.
Absolutely, because the banks knew that taking a little bit of a loss up front, taking that L on, hey, we're not going to get a monthly payment for 3 months or 6 months, or some of them even extend it to a year during COVID times.
Yeah.
We'll get paid eventually. And the house doesn't become inventory.
Right.
And that
becomes a bigger headache. It becomes a bigger. I mean, then you have the players that were...
And the block burns down.
Yeah. We had people that were taking advantage of it who didn't really need the help, and then they were buying stuff.
Banks didn't even care.
Yeah, they were buying stuff. They were calling me. They're like, I want to buy this house. I'm like, all right, well, why are you in forbearance then? Like, you have $1 million.
Yeah.
Right? I'm self-employed.
Yeah.
I was like, I hear you. I was like, you have to get out of forbearance, though. If you're going to buy something, we can't lend you if you're not doing that. So that's the side I saw, right? Like,
there's always going to be some.
But I'm self-employed. I was like, you're a doctor. All right, relax, bro. Yeah, that's a real story.
COVID affected me. I'm a doctor. Really?
Yeah, you're killing it, bro. You're killing it, right?
Come on.
Yeah. But
it was Wells Fargo their money.
It was legit. He's like, I'm self-employed, Omar. What do you think? I don't know what's going to happen tomorrow. I was like, bro, you're killing it. I'm looking at your bank statements.
Well, and the bank set the requirements to go into forbearance so low.
Yes.
Because they knew that if they made it difficult, like they did in 2008, that they'd be seeing the block burning down again. And they're never going to do that again.
Yeah.
They're not going to do that again.
Even the cars. Even the cars, like you don't want to make payment this month, or you want a quarter off, 3 months off. But then you had the stimulus money. Then you had, so everybody's playing the game. Everybody was playing the game, right? So that happened. Then we had a proliferation of people coming into the industry because it was so easy. It was 2%, right? We could sell anything. People had cash. Where they got it, we're not saying. I just said it before. And they're paying over value. So there was no inflation. There was no bubble because they were paying cash over.
Yeah.
Right. So I'm going to explain the economics behind it, because everybody, it's going to happen this. No, it's not. No, it's not. They actually buffered it. They were paying the spread.
Yep.
Right. They were bringing money. And that's why the market's so strong. And for those that are waiting on the sideline for something to happen, I don't see it happening.
So, I think everything comes to supply and demand. Everyone pointing at all these different economical equations and formulas and complicated structures and printed too much money and foreclosed. Forget it all. It's all supply and demand. And that comes down to the demographics. Right now, our typical first-time home buyer is a millennial. And let's say your typical current home buyer is a baby boomer. And obviously, people are living longer. People are retiring and staying in place, especially with 2% interest rates. If they have a lower interest rate in their house, people would think, let's downsize in retirement. But if you have a 2% interest rate right now, if the downsized place costs more, you're not going to do it.
Right.
So that's affecting supply, because the boomers aren't selling. And there's more millennials than there are baby boomers.
So
and your average age of a millennial right now is 35, 36, something like that. They're not kids anymore.
Right.
And they're buying houses. They're having families. They
get a lot of gifts too. I'm a little mad about that.
Well, because their parents are the boomers and they have acquired wealth. And yes, it's unaffordable.
Yeah.
People are right. It is unaffordable. I see lots of the millennial buyers getting gifts.
Of course.
More than I've ever seen.
Yeah.
First-time home buyers getting gifts from relatives. Yeah. Yes. But that's it's the American way, right? Isn't that the American dream?
Right.
That I hope my kids have it easier than me, and I hope I can give them more than my parents gave me. Right. So if anything, to me, that means the dream is working.
Right. We're executing on the dream.
Right? And now do other things need to be maybe addressed? That there needs to be more housing, because not everyone has a parent who can give them a gift. Absolutely.
Correct.
That's for the politicians to handle, though. If and when they could figure something out.
Well, spinning that back into the inventory that we have a surplus of, that landlords with the rent stabilization, they're not willing to fix these properties because they're not going to make their money back. So now it's business 101.
I heard an astounding number, like there's 100,000 vacant units that aren't habitable in New York City.
On purpose.
Because the landlords, it's not worth it for them to fix it. So the problem is that the rules that they've put in place, the laws that they've put in place that are trying to help people are actually hurting people.
Yeah. All over Harlem. I was down there 2 days ago. All over Harlem, you have the storefronts on the bottom and 3 apartments up top. No apartments, all shuttered. All of them shuttered. And I asked my boy who has the store, I was like, do you ever think about buying this? He goes, they won't sell it to me, first of all. He said, second of all, they're not trying to rent it because of rent stabilization.
Not worth it.
Yeah. So, in Harlem alone.
Make the money on the store and.
Right. That's it. It's not regulated.
That's 3 people who need housing that can't get housing now. So it's an issue that needs to definitely be addressed. Again, for the politicians to figure out, but how they haven't figured out yet that it's causing this issue. And I forget what it was. Do you remember what it was? Because it was only a couple of years ago that they put it on 6 families and up. It used to be 20, I think, families.
Yeah. So they brought it down to capture more, affect more people.
20-unit plus apartment buildings, we're talking about.
I see the leverage on that.
But yeah, exactly. And we're also talking about Wall Street or wealthy. A 6-family.
We're not talking mom and pop owners.
We're not talking about mom and pop owners, right?
That's the big deal.
Or family owners. Like my family bought this house in this property in the 70s as an investment, and left it to me, and now it's not worth doing anything.
And I can't do anything with it.
I just did actually with Flushing. Funny enough, I just did yes,
Patrick, I love you. Okasa.
We just did a 6-family in Ridgewood, and $1.2 million was the purchase price. I'm like, wow, really?
That's it.
That's right. Exactly.
Yeah.
You told me 10 years ago, I would have, let's buy on that. That's fantastic. Because of rent stabilization.
Yeah.
I saw the comps. That's the going number, if not lower.
Because of rent stabilization.
Because of rent stabilization.
Open market, it'd be a different story.
Open market, they'd be worth $2 to $3 million easy.
Right.
But so for the landlord, yes, problem 2. And I think you're going to get the secondary problem of money coming into New York. What investors are going to invest?
Yeah. Yeah.
New York is the mecca of investment.
Yeah.
And if you're shutting investment down, you're making it less business friendly. That's a problem.
Yeah.
You know?
Yeah. I mean, everybody went to Miami for a little while, right? And then
Still are.
I mean,
There's so many people.
I don't know if it's as hot as it was.
You mean like financial institutions moving?
Well, people parking money,
Okay.
right? As foreign investment.
Yes.
Right.
Yes.
They're parking.
Well, DeSantis just passed some laws to shut that down.
Really? Because a couple of my friends out there are lawyers. They're like, yo, I'm coming down the elevator. I go in the parking lot. There was all these Ferraris with dust all over them. He's like, nobody's here. Like, they own them. But
same in Manhattan.
They haven't been.
Same in Manhattan, or was more prevalent before, but still now today.
Right.
A lot of those penthouses or even just apartments overlooking Central Park, they're empty.
They're empty.
It's foreign nationals parking their money. Like, that's just an economic play. Hey,
Right.
if you want,
That's the chess play of global economics.
that's
right.
It's really a forex.
Yeah.
It's play more than anything.
Right.
Hey, my money is in whatever it may be.
Forex means foreign exchange.
Foreign
I teach my people. Hold on. So if you're saving your money in dollars and your economy is not as strong as America, and your dollar or whatever currency you use is lower than dollar per dollar, you're really, really shielding your money to appreciate.
Let's use another established market, Japan. Yen.
Okay. Yeah.
So basically, if you have yen and there's very slow appreciation to yen, and you want to put your money in dollars, are you gonna? If you're a foreign, billionaire, millionaire, whatever it may be,
Billionaire.
yeah, they're not gonna go and open a savings account in the United States and have their money in dollars. They're gonna buy a penthouse overlooking Central Park that is going to give them real estate, tax advantages. It's going to give them appreciation from capital gains, because if you put dollars in and there's inflation, well, your dollar becomes less valuable, where capital gains will wipe that out as long as values are going up and not going down.
Right.
So you'll see that's why that phenomenon happens more and more, as you know.
Today's lesson on economy.
Yes.
No, I mean, listen.
So if you guys know any billionaires
Yeah.
in Japan,
Tell them about Manhattan, right? We buy something in the South Bronx, and it'll appreciate eventually. So, all right, Prudential Borrowing. You started it about 20 years ago, right?
Yeah, we'll say give it a couple of years under. But
So I think we had a conversation offline before where you were like, I think I'm going to focus on growing, right? So what strategies have you implemented?
So, as any small business, I was, I kind of came across my choice is to get smaller. There's rising costs, rising regulatory costs, rising IT costs, rising everything costs.
It costs money just to open your doors, guys.
Absolutely. I have to pay New York State yearly, just for the privilege of being here.
Right.
And every state, we're licensed in 10 states. They all have licensing costs and yearly costs. New York's by far exceed all by, yes.
It's a privilege to be here. Thank you.
Drastically further. Yes, absolutely. For anyone who's listening in the New York Department of Financial Services, you guys are wonderful. So we have to get bigger because economies of scale. More people reduces that underlying cost because we want to offer better for our consumer, right?
Right.
Or get smaller, right? Because smaller, then, you don't need as much into it, right? But I get smaller, then I can't employ the accountant who does it on the side, who does a deal every other month. I have to get smaller and get away from that. And I don't want to get away from that.
Okay.
I want to actually support the people we have here and the staff. I want to grow. I certainly believe we're a good company to work at. And, we have several employees for many years. So getting smaller would not be helpful for them. So I decided to go bigger. And I thought about this for years of what to do. And there's some models right now, and we won't mention names, but
no, we won't mention anybody.
You know them.
But I'm here
that are going to low cost models,
right?
Less support, lower cost. Trying to bring more loan officers over.
Well, they're fishing for that with the flat fee and
things along those lines, and they have their models too,
which will work for a really autonomous LOs, right?
Autonomous established LOs,
right.
Absolutely, who have their own processors, who have their own teams, who have their own structures.
Basically have their own companies, right? It's plug and play companies,
right? Almost like they have a branch already that are operating. So we faced with a couple of ideas. Do we do that? Do we just do high payout models? Do we do what do we do? And I've always been also looking for a partner over the last several years, or giving someone equity to come in and help growth.
Right.
But we're a low cost rate model, low cost rate. And so it's hard to have middle management because there's not that much money in it if we're still giving consumers great deals, which we are. And
Let me pause you for a second. So, all right. So just real quick, guys. The middle tier banks, the little bank, I'm not going to name names, but the reason they're able to have managers and customer service reps and whatever else you want to make up to help somebody is because the margins on what they're lending have padding. Padding is basically extra cost to the consumer.
Yeah,
so I want to give them some sort of tangible understanding.
They'll be giving perhaps great service. I hope great service.
They better be,
but a higher interest rate and more closing costs, perhaps.
Correct.
Which for some people might be worth it. There's, listen, you pay for what you get, right?
Right.
So I don't want to, talk bad about.
No, listen, it's not. If I insinuated anything was bad, it's not. I'm just telling you this is just the business.
No, you didn't.
That's all it is. It's a business.
So they're going to have a higher interest rate than like the broker side and retail. Our rates are more in line with the retail side, and that's because, I don't have a Fifth Avenue address like Chase. I don't have middle management and all that in place. But they have grown to that economy of scale that they can still give great rates and have that middle management.
They're trading their own MBS on the backside. There's Forex people. I mean, that's stuff you can.
But where they lose out, though, is they lose out on experienced loan officers who are going to want to work and give good customer service. We brought loan officers. I was actually just talking to one of the loan officers a week or so ago. I'm not going to name names, of course.
At another company?
No, here.
Oh,
he's here now.
Okay.
He was
somewhere else.
He was a corporate guy.
Okay.
20 years on the retail side.
Okay.
And we were talking about where we get our business from, and he was mostly real estate agents. Like 80%. We were going through his closings. He's been here for like a year or so now. Okay. We're going through his closings even here. Mostly real estate agents. And I'm like, most of mine is past client referral, not real estate agent or Sphere or wherever. It's past client referral. And since he was on that retail side, he wasn't giving the customer experience. Like he had other people doing it. He had mid-level management and other people to call and this and that.
He had buffers.
Right. Which means Chase was getting the phone call. He wasn't at Chase, but the retail lender was getting the phone call, not him.
Right.
Where on our side, you're building your own book, your own brand. You're yourself, because, well, quite frankly, we don't have that middle management. You're making more per file than, let's say, you are on retail. There's more to do. There's more in it. We have way more product, of course, and that's a whole different
And can we talk about, you have to be really good at working with others, right? I posted something on LinkedIn this weekend about a deal I did in Connecticut. And so I get the text from, I'm not going to name names. Hey, man, just so you know, my wife does this. She's an attorney. And when I post on, this is really an education right now. When I post on LinkedIn, I really give the background of the story. So basically what happened was they went to their regular guy. Regular guy told them something they didn't really kind of believe. It just felt weird. And then they came to me, hey, what do you think? And I looked at it and said, I think that's crazy. I don't know. Maybe he just doesn't have access to the investors I have access to. I said, but it was a DSCR program deal, And I told him, look, this will be the rate. This will be the thing. Let's do it.
Do you want to explain DSCR? For
debt service coverage ratio, basically investment property, as long as the rents that you're collecting pay the mortgage, a principal, interest, taxes, and insurance, at least one, meaning equal or greater, you qualify.
So just to plug you, Omar can get a deal like that
I can help
done. Yes, where if you're going to a traditional lender, they're going to want a 1.25 DSCR, and they're going to make it a lot more expensive. They have their own calculations.
No, the crazy part of the thing is everybody has their own way of doing it, right? So it may not have worked. He might have not been lying, but for his reality was, I can't do this. So we got it closed. So they were like, just letting you know. I said, and I explained it to him. I said, of course, we always want to be informed, right? But I told him, I said, I was the last guy at the party. So I had to play with everybody here. And going back to what I started saying, you have two realtors. You have bank attorney, seller's attorney, buyer's attorney. You have title company. You have insurance agents. You have inspectors. Appraisers. All right. Did I miss anybody else?
Oh, possibly.
All right. So there's 9 people I'm naming that on a transaction that have to be on the same page. Insurance. That's
almost insurance.
That's tense. That have to be on the same page and run at the rhythm. As a loan officer, we're usually dictating the tempo, right? So I'm coming last, so I have to make up quickly.
I should get that client who's trying to dictate the tempo, but they can't.
No, well, usually, if it's a fallout, I call it a fallout deal. If it's a fallout deal, they want to know what can happen because obviously in Connecticut, the deal was the down payment's already online, right? And how many calls do you get about that? New York, whatever state. Look, I tried, it didn't happen. Yeah. So once they know, listen, I have to trust you, you start dictating the rhythm. Hey, this is what we're doing.
Yeah.
Does it sound good? Good. All right, cool. So we're closing this day. So no, like using the power of social media to illustrate transactions that I do. It's also just a way for you to understand, like, that post, I got 5 DMs. Hey, I have a similar situation. Like,
and hopefully they come to you first instead of last minute when their down payment's on the line.
Well, just seeing that post and that story, it's usually similar situation, and they can resonate. They'll be like, hey, can you help me? And I asked 5 or 6 key questions, and then that starts a whole new conversation. So going back to what I was saying, it gives you consideration, right? Yeah. Marketing gives you consideration. So you have these guys that use realtors, and you told them about your referrals, right? Mm-hmm. But what do you tell them? Hey, you should maybe upgrade your business model so you don't have to, because you're basically at the mercy of somebody else's business if you're only waiting for
referral.
Right. Yes. Right. So do you have any advice for you guys?
So, again, my advice is how I built, and to what you said earlier, it does take time, and you have to be an authority. So it would be different advice for someone who is new as opposed to someone who maybe has, experience in a book of business or however you'd want to call it in our industry, past clients, is, yes, using social media and other CRMs, things along those lines, to inform your past clients of what you're doing and how well you're doing and who you're helping, because you're going to build then more referral base. I think the ultimate goal, in at least my side, is to be referral base. There's pluses and minuses to it.
No, I mean, look, the pluses, they come to you and they trust you inherently. They're not second guessing everything.
Yeah.
The minus is that, and some things you cannot control. Like, I can't.
Minus.
Well,
that's right there. So you can't control when someone else is going to call you.
Yeah. Some things you don't know when that call is coming. But a lot of guys get caught up with different things. Like, oh, he told me his sister's a loan officer. I was like, what do you think was going to happen then, bro? Like, of course they didn't know this. It's going to help you.
Absolutely.
But you can't control that. So don't worry about that, right?
One of our biggest lenders is UWM.
Yeah.
United Wholesale Mortgage.
Shout out to Matt.
Matt, I was actually gonna give him credit on a quote that he said maybe 2 years ago.
Okay.
That resonated with me and many people in the industry. Control your controllables.
Yeah.
You can't sit there fretting about something you can't control.
You'll make yourself sick.
You can't control that person's cousin is a loan officer.
Right.
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 What you can control is, and this is maybe to answer the other side, the newer, younger, less experienced person, and
the new generation coming in
in any industry.
Right.
Control your controllables. You can't change the fact that the guy next to you has been doing it for 20 years and has a book of business, and he could sit there and wait for his phone to ring.
Mm-hmm.
You can't control that. What you can control is how many times you dial the phone a day.
Right.
You can control how many social media posts you put out.
What actions are you doing to increase your business?
One of, and let's go back to Mashpee again. I forget exactly what the number was. It doesn't matter what the number is. You do something, you create a plan, and you stick to it. And this gets to work ethic and things along those lines. I guarantee you, for anyone, if you go to, set even a simple number, 3 real estate offices a day, 3.
Consistently.
Go to 3, but do consistently. Right. For 5 months, you're going to get tossed out 80% of the time. Go away. You show up. I think the example he used was bring coffee and donuts every Monday.
Right.
Every Monday. Pick 5 up every Monday. Do it for 2 months. Someone's going to finally break. Right. Persistence always overrides resistance. Mm-hmm. Eventually, someone's going to be like, okay, you've been coming here for 8 weeks straight, bringing coffee and donuts, and we haven't given you a thing. Why do you still come? Mm-hmm. But because that's the work ethic I have.
Yeah.
And that's the work ethic I'm going to show with your clients. You're going to convert.
I mean, I say this all the time, showing up is half of it, right? Obviously, you got to be great at when you're ready to go, but you got to show up. You got to show up. And some people, they disqualify themselves by not even showing up. And I had a meeting with Quantic Bank about 5 years ago, right? They wanted to do a pilot program for their, Quantic Bank is a niche bank in
regional lender.
They're regional lender in Queens, Manhattan. And so the president sets up a thing. He's like, I'm gonna do this pilot program with 3 brokers. Mm-hmm. It was a rainy day. So I get down there. I'm wet, but whatever. Just I park the car. I get up there, and so I'm sitting there, and my AU introduces me to the president of the bank. I'm like, hey, yes. Oh, he's smoking his vape pen. Shout out. And so he goes. I go, where's everybody else? So they're like, oh. well, this guy can't make it because of the rain. This guy, so he said it better. He's like, all right, so Omar's getting a pilot program. That's it. He showed up. That's it. Fuck those guys. Don't let them. And hopefully he doesn't make any enemies with this. But he was like, yo, you showed up.
When you deal with older school business people,
yeah,
that's what's going to happen.
Yeah.
With myself, and I'm sorry, yourself included.
Yeah, you say what you say. You do what you say you're gonna do. That's half of it. That's half of it. Yeah. Yeah, and that opens up so many doors.
Maybe this is just us getting older, but I feel like it's diminishing. People aren't showing up as much as they used to. But then again, I feel like someone was probably 40 years ago saying that about, or 20 years ago, not 40 years ago, 20 years ago, saying that about our generation, right?
Yeah. I guess it gets harder every generation, but we kind of know what works, right? Mm-hmm. And we're trying to give them that insight. Hey, man, this is what you should do. Yeah. And they're like, until they get kicked out on the curb a couple of times, and like, I got to change, or nothing's going to change here. I think that's really the biggest thing out of this whole thing, residential or commercial, doesn't matter. It's the amount of work you put into it, and also being ready when your time comes, right? Like, it's almost like sports. Like, you look at the guys on the bench, right? But they come out and they do some crazy shit. Like, you think it just happened?
You again, control your controllers. You can't control that someone calls you Sunday morning interested in buying a house or needing financing. And if you're not ready to go at whatever time that other person dictates, absolutely. It's one of the real negatives of our industry, I think. But, that is, an unfortunate, like, that, right, Sunday morning, you could be with your family, mm-hmm. and that person doesn't care.
Yeah.
They will.
They want what they want.
They'd be like, okay, it's absolutely great that you're with your family, but we're going to call this next person.
Yeah.
It's just kind of how
we kind of get commoditized a bit. Yeah.
Yes. Yeah. That's a perfect way of saying it.
And if you can if you're really, like, I've had guys, I was like, listen, I'm with my, whatever I'm doing. I can hit you Monday. Mm-hmm. I've had guys say, okay, I'll wait till Monday.
Yeah.
You can highly recommend it from this guy. You go, and that's building your brand, right? That's their attorney saying, yo, wait for that call. I don't want to deal with anybody else. Yeah. Right. But that becomes what you've built over your years of being authentically appreciative of all your people, but also giving the service, right?
Absolutely. And just being real with people. Like, you have to, how many people in our industry or any industry just don't pick up?
Yeah.
Or
I've heard that a lot.
Or give some song and dance, like about this or that. And just tell them the way it is. And, if they connect, they connect. If they don't, they don't. And honestly, if they end up if you say I'm with my family on Sunday and they call the next guy down the list, you probably didn't want to work with them anyway.
Yeah, absolutely.
At least that's what I tell my.
I was gonna say no. I had a story. So we have this deal. It's like an $8 million purchase, right? And it was a church was giving a piece of land to somebody, so the AG's involved, right?
Those are always fun.
So during that process, that's fine. The seller's attorney was supposed to do a few things. AG approves it. It's 8 months later, which is fast. We're ready to go.
In New York?
Yeah.
It's very fast.
We're ready to go. We're ready to go, right? So he sends us an email back. He's like, oh, I just got this email back from the AG. I have to do this, this, and this. What he didn't realize was that he sent us the chain of the email. He sent the email to the AG maybe a week ago. 8 months ago, he didn't do anything. So the craziest part is that we assigned the seller's attorney because the people were destitute. So this guy's never getting business from us again. But the moral of the story is that people are going to find out if you suck.
Yeah.
No matter where I put you.
Yes.
If you're I don't want to say it that way. If you just don't have the work ethic, it's going to show.
Yeah.
Especially when you're hanging out with guys who have the work ethic.
Agreed.
Yeah, it's going to separate. You can fool the fans, but you can't fool the players, right? That's an old saying too. I
believe that. Yes.
Yeah. So that 1% of guys that are moving shit around the industry, we see you. We might not have to. We're not out there saying, hey, but
it's a small big business.
Yeah.
Mostly know each other already too.
That's a great statement. It is a small big business, right? Right. And everybody, I believe most people stay respectful because everybody knows that people have been there for that long are not going anywhere.
Yeah, absolutely. And again, anyone who's been here that long, they're doing something right.
Right.
They're doing something right, if not everything. Right?
Yeah.
I would lean towards they're probably doing everything right.
How many times do I say, look, I've been doing this full time? Not like, oh, what do you do? You're an influencer? No. This is just so you know I'm still doing it.
Even I was asking you. You record weekly, you were mentioning.
Yeah.
And, this is changing times. You have to change with the times, right? Or you get antiquated.
It's all important. If you listen to that statement, it really is like originating, knowing the guidelines, meeting new people, doing events, doing that. This is all important because when you're taking that time with your family, this part's still moving.
Yeah.
And that was proven to me so many times. Like I did a funnel campaign with WhatsApp. So they would see the ads, and they hit me on WhatsApp. And I'll tell them I'm not available today, I'll available Monday, but I was able to exchange ideas with people, and they were cool, but they're watching. And I'm not, think of it this way, like imagine going to your phone calling everybody every day. Hey man, hey, I do loans, hey, I do real estate, hey, I do this, hey, I'm alive.
I don't have to imagine. I've done it.
Who has that time, bro?
So you've done it in the past
In
as
the
well.
beginning, right before the new times. And now it's like, no, man, I just one text blast or one email blast or one Instagram post, and everybody knows. And everybody knows, I came in, it was your son's birthday yesterday. They knew from an Instagram.
How do you establish the following? Because obviously if you're boosting it and posting it, it's to your following. And
Giving, well, we started.
Or do you do more targeted?
We started years ago, and it was always like, we have to give value first, right? And then every so often I'll run targeted ads at certain income demographics and places. And that will even get a little more specific with loan programs, right? What you think they are looking for. And then you start running them and you see, and if it doesn't work, you adjust. And, but it's almost like the Matrix, right? You have the data, you can target anything. Yeah, which is incredible. Yeah. But you just have to. The big thing what I understood early, but I still get amazed by now is that you have to have this foundation of content because what people want to do is get to know you without calling you. They want to feel like they have some sort of background on you, right? Before they get on the phone with you. How many times have I spoken to somebody and they say my wife's name off the top? Yeah. I'm like, how'd you know? He's like, oh, Instagram. I was like, oh, okay. And that's when you kind of get
used to that.
Yeah. It's a thing, man, and it's gonna keep changing. But I think it's been a great investment for me, and I try to show all my peers.
Most of your reach is organic at this point, then.
Yeah. And I run ads. I run ads like every quarter. Okay. Because I don't think it's ever gonna be enough.
Oh, because you always want to reach
new people. Right.
And then they become organic.
Right. You pay for acquisition, and then they become your people. Yeah. I mean, one of the best stories I ever had was...
And you still have to give good customer service, get the deal done.
That's on top.
Probably in this day and age even more.
Yeah.
Because if you don't, then it's also...
They'll click off.
It's also, it could be easily blasted out to everybody.
Yeah.
There's obviously bad actors in our industries. Yeah. And some still exist. There's less, I would say.
Yeah.
But it amazes me that the bad actors still exist. In today's day and age, with information at your fingertips, how they haven't been weeded out, you know?
Well, there's a whole economy that is not online. There's a whole, and that's another conversation, but there's a whole economy not online that I'm always surprised at. I'm like, how'd you get here? Or who told you about me, right? Oh, my cousin's uncle, heard you on the radio.
Yellow Pages?
Yeah. No, they'll some wild, you helped my cousin.
Still exist?
You helped my cousin, I don't know. You helped my cousin 5 years ago, and they called me. I just came in. I'm like, okay, it makes sense, I guess. But like, those are always funny too. Like the DMs are like validation that what I'm doing is correct. But getting the obscure, you gave my cousin a nice basket at their closing 6 years ago. They raved about it. That I had to call you.
And I still have your physical business card.
Yeah. This is you, right?
Yeah. And it's tattered edges.
Yeah. But it's just giving value at the end of the day, right?
Yeah.
All right. So, Eve, where can people find you when they want to get on the boat with you?
Yes. Actually, I do want to circle back. We diverged off. You asked how we're growing.
Oh, I'm sorry. Yes. Sorry.
And I forgot what we diverged off on. Perhaps boats. Definitely more interesting than mortgages. But yeah, so
mortgages are interesting when you need it.
Yes.
Right? That's when it becomes super interesting.
And we're going to diverge again onto the...
Let's go.
No, but, that's something that's very interesting about our industry that most people don't understand is, on average, people in their lifetime have 6 mortgages, I believe is the average.
Okay.
Over the course of 50 years, something like that is the average. And you have to be at the right point, the right place, the right time.
And ready.
Yeah. And ready.
And ready.
And ready and able. Right.
Yeah.
Exactly. It's where in other industries, I don't know if you're selling sneakers,
Hot drop every week.
Yeah, exactly.
Hot drop. Exactly. I was talking to somebody about
someone's buying more than 6 sneakers in their life.
I told somebody that the other day. I said, what I do, I have to stay relevant because what I do is not every day.
Yeah.
Like I was talking to a contractor. I said, they're not going to rip out and do a new kitchen every week, bro.
Mm-hmm.
So the service you give them,
Mm-hmm.
maybe 6 to 10 years, every a new kitchen, right?
Yeah.
So you want them to be pumped up because you want them to come back, right? So every 6 to 10 years, I was like, sometimes I get a good mover. Like I get a client who's buying a lot of stuff.
Mm-hmm.
Other kind of the normal person is buying one house.
Yeah.
Every 10 years, maybe they upgrade or downsize.
Right.
Maybe I think 3 times.
With rates higher.
Right.
You know?
Yeah.
But I think that average from 6 mortgages went to like 4 if you were taking your mortgage out in 2020 to 2022 because the rates were so low.
Right.
You know, but it's a much lower possibility of it. But even with those low rates, you know, it was like, oh, no one's ever going to, you know, the refinance again. No one's ever going to, you'd be surprised. I believe the number was 70% of all mortgages. And another statistic most people don't know, half the houses in this country are free and clear.
I didn't know that.
Half the countries in this house don't have a mortgage.
Really?
So the 50% that do, and, you know, keep in mind, that could be a
Tennessee.
$60,000 house in Minnesota, you know, owned by someone since they built it, you know.
Right. They built the house they live in.
But bottom line, no, 50% of the houses in this country are free and clear. You know, and that guy gets into low interest rates, and people probably didn't take advantage of enough. When rates were low, they should have just taken the money out of their houses. Think about it. You could have taken a 3% interest rate and put it in a savings CD right now at 5%.
Be ahead.
And be ahead, right?
Yeah.
Beating the interest. But anyway, that's perhaps a conversation for a different time.
Yeah, that's looking in the rearview mirror.
Yeah, or when rates are lower, you know,
Yeah.
because then that would be good advice for people again. But out of the 50% that are mortgaged, 70% were under, I believe, a 4% rate 3 years ago. Now it's 50%.
Oh, okay.
Because in the last 2 years of purchases and
Oh.
things happen.
Right.
Divorces happen. Moving happens.
Buyouts
Relocations
happen.
happen.
Partnerships happen.
Death happens.
Yeah.
You know, there's a multitude of things that happen.
Mm-hmm. Life happens.
Life happens.
There you go.
You
Yeah.
know, you get another several years of this, I think you're still going to have a core. There's going to be some people who keep those 2.5% rates forever.
Yeah. Yeah.
You know.
Because everybody calls about HELOCs.
Yes. Well, you start getting into that, you know, and people don't understand. Someone we had, it was a loan officer brought it to me. They're talking to me about a HELOC to pay off debt. I forget what the client was doing specifically, but the rate was, didn't have perfect credit. And the rate was like maybe 8.5 on the HELOC. And it was like $400,000 HELOC they wanted. And they're like, they don't want to touch their 2.5% rate.
Nobody does.
I'm like, okay, what's the balance on it? 200,000.
Yeah.
Okay, you have 200,000 at 2.5, a HELOC at 8.5. I can get you a regular mortgage at 6.5 right now.
It's called blended rate.
Well, yeah, you're
blending
the blended rate calculator. Of course, you know, their blended rate
Education rate.
is way higher. You know, we get the opposite all the time. I think in the last 2 years, I've talked more people out of mortgages than into mortgages.
Right.
You know,
But then you have people with a lot of unsecured debt that sometimes you're like, yo, man, you're at 30, 20 now. Like, if you do the math.
Yeah, 80,000 in credit card debt.
Yeah.
You know, pretty much anyone who has more than 50,000 in credit card debt. I don't care what the rate is on your mortgage.
Mm-hmm.
Maybe a HELOC would make more sense if it's 50 compared to 400 on your first that's locked in.
Right.
But there's something you need to do
Mm-hmm.
because credit cards,
They shouldn't be that big.
Well, yes. And their rates are I think there's $1.1 trillion in credit card debt in this country now.
Oh, yeah.
It's like record levels, which is problematic.
Yeah.
But anyway, back to what we're
Back
doing.
to growing.
To support the people and grow. So I was caught with this, what do we do, right? And last year I decided to create.
When you say we, is yourself?
As a company.
Okay.
And I often refer to the company as we, because I see us that way.
Right.
Which kind of gets into what I set up. I created a profit sharing program where we give 50% of our profits, the company profits, back to the employees. All full-time employees, full-time loan officers. Obviously, we have some metrics figuring out who's full-time and part-time.
Right.
But we give 50% back. And that, the concept is, and what's working is, it was to create an environment where everyone works together. There's only one me.
Yeah.
And, well, like I said, we have low rates and low costs. So we don't have middle management. So how does the broker model do this? And so it doesn't mean that no other broker that I know of has done. It's much more like a law firm or an accounting firm where
The partners.
kind of, we have a profit sharing that goes on now. And the idea is to grow, right? Where yes, instead of being 100 on 50%, but I'd rather be 50% of something bigger, right?
Yeah. Yeah.
And what really is, because I always think about where I'd want to work. Now, I'm primarily a loan officer. I've been a loan officer. I've seen.
So you're an operator, operating your loan officer business as well as the company business.
Yes.
Right.
Yeah. Okay. So what I see then is, where do I want to work? Would I want to work at a low cost model where if I have a question, I can get help? Or if a deal is going sideways, which happens,
More often than you know.
And if you're at a good place, you don't know.
Right.
The consumer does not know
They get
that something's out. They just think everything went amazingly and went well. Oh, no, you don't understand what happened with title because we took care of it.
Right.
We had the support, we had the operations to do that. So my concept was then to do I was thinking about equity share in the end, but it was complicated legally. Mm-hmm. So I did a profit sharing program where we share. And now, if you're a newer loan officer or just less experienced or coming from retail, you have so many loan officers coming from those retail models into the wholesale channel, or brokers, and they don't know what to do.
Right.
They don't know about all the products we offer. They don't know what DSCR is.
It's overwhelming, right? Because it's too much. It's too much to learn.
We're online with 40 different lenders. You've just spent your career
at one place
with one underwriter, with this cookie cutter, and this is what we do. Mm-hmm. What we do is I can't even remember what we do.
Right.
We have lists and put them obviously places things into place to figure that out for newer loan officers and support. So, but now if everyone's sharing in the profit of the company and everyone's sharing in the success of the company and the growth of the company, well, now every top producing loan officer, or used to be a loan officer, like, I don't care about that guy. If anything, it
doesn't affect my bottom line.
Yeah, exactly. If anything, he's more like competition, even though we're in the same company. This creates a model where a top producing loan officer is incentivized to help the new generation, the beginner, right. There's someone else coming in, right? Because if we all work as a company together to grow and bring more people in and help each other, well, we become a stronger company. We're going to have better customer service. As opposed to, let's say, one of the low cost models or flat fee models. Well, if you're coming over from retail into one of those models, who's supporting you? Who's helping you?
And can we talk about for a minute, like when you aggregate people and you're moving a lot of, let's say, units or money through any investor, you get consideration. You get incentives. You get programs that you're able to give to your client. That other guys can't do. They just don't have the volume.
Growth establishes that. That's one of the considerations when I said I have to go smaller or go bigger. It became that. Like, if you go smaller, you carry less weight, right? Like you said, we don't really have different programs per se because residential mortgage is kind of the same.
Yeah, but everybody's always talking about better pricing,
better underwriting,
pods of underwriting. You have a closer
support
community,
better support, which then passes on to, well, better for your loan officers, better for your clientele,
better experience
for everyone all around.
Yeah.
And so that what we're creating here is like a cooperative, where people are going to work together and be better. And it gives then now this newer generation also, you could be part of something bigger.
Right.
I want to be part of something bigger than what we were.
Right.
And this was the way to grow, and it gives me the ability to grow and the company to grow in a way that I would still want to work here. If I was a loan officer, I would want to work here. And that's what I always think about. If we do this, then we're going to have to cut that. And if as a loan officer, I want access to that,
I want it all.
Right.
Yeah, I want it all.
I want it all. I want great payouts. I want good compensation. I want support and help. And that was really the struggle that I tried to figure out with our staff here, was how do we offer that support and also offer top payouts, where everyone wins. And the idea was, as it be smaller, because that was the idea too. What if we just do teams, and then, but then that always caps out too.
And that fragments people.
Yeah. And it creates a pyramid problem.
Right.
Right. Where obviously if you're on a team of a team of a team of a team, yeah, the guy in the bottom is kind of getting a raw deal,
What about, let me ask you this question, because this is something I've struggled with too on my side, in terms of culture. How do you establish culture?
Well,
that's a hard one. You don't have to think, you don't have to answer
pre-COVID and post-COVID are different answers.
Okay, well, how about now?
And yeah, so I am still trying to answer that question now because, we are thankfully in a world that has become much more internet savvy. Even our non-internet savvy loan officers or tech savvy loan officers are now tech savvy. COVID forced it.
Right.
Through
either that survival or,
and we're fully set up, and we were fully set up before even to work remotely,
Mm-hmm.
to work in office. You know, we have desks here in our office you could sit at physically. You could work remotely at home or in a hybrid office or anything like that might be.
During COVID, were you coming in every day?
No. We went remote for the times, even though we were, considered necessary. We decided we were fully set up that we could work remote.
Mm.
I still came in once a week, because it's my place,
No, I used to go into the office too, only because sometimes it was cool. Like I thought it was cool to have an empty, right? Because the kids are in school. My kids are still in school on their laptops, whatever. Yeah. And, wife is doing whatever wife is doing. She's working or not. And then the apartment wasn't that big. It was prior to the house. So we had a 2-level apartment. I was like, yeah, it's kind of, I need space to think, right?
There's also different mentalities, as well. And because we could still be remote.
Mm-hmm.
In fact, and that comes the culture question. Circles back to, if you go out here, there's 2-3 people in the office, right? On any given day, rather than we have 23 loan officers, there's 1 or 2 that come in, right? We have our office meeting next Monday. There'll be more people here, but the good and the bad of it is a little bit, we're expanding into other states without having physical presences,
right?
Because we're set up that way. I do think whether it be even if it's your home office or I was gonna say Airbnb, a WeWork type situation, or whatever it may be, I think coming into the office, it changes your mentality too.
Yeah, I think it changes because it's almost like going to the gym. Right, I have a home gym, which I do certain things at, but certain things I want to go to the big gym. Why? To do the sauna, do this, to do max out, whatever it is. It's a mentality shift, right?
And because now when you're home, your mind is on home things.
Yes.
Yes. When you're in the gym, what do you just sit around the gym and you snack in the gym?
A lot of people do that, but not me. Well, no, listen, people on the phones at the gym, I'm like, yo, bro, you finished the machine?
Yeah. I wouldn't be same. My mentality. I come into the office pretty much every day, even though we could work remote. A, to be a leader, but B, I'm at home. If I don't have something present in my face to do, obviously I'm picking up a phone call, right? Obviously I'm answering an email, but I'm not sitting there thinking theoretically about what can we do to grow? What can I do for this? Who can I reach out to? Who can I reach out to that I haven't reached out to in a little while? If you're at home or even in your home office, I'm like, what snacks are in the fridge right now?
Yeah, I'm hungry. You're always hungry at home. You're always hungry.
Yeah. When you're in the office, I'm not. What am I do?
You're not even eating like that because you're busy trying.
Yes.
Because you come in.
It was good for my diet, also not working.
Your mode changes, right? Your mode, right? You come into work mode. You're like, yo, this is what has to get done. How do I figure out how to close this deal, get a new client, or just money making activities?
Yes.
Right. That's what you do at work.
Yep.
At home, I like to be at home, right?
And that's the other part of it too. I was always a big proponent of separating. When I'm home, yes, I want to be home. I want to be present there, with my family or with whatever it is I might be doing, watching a movie. I want to be present with that.
Even sitting outside, looking at the grass.
Yeah.
You want to be doing that. Yeah, I get it.
Yes.
And I agree. I think mentality does change when you change your
scenery,
your atmosphere, your situation.
Yes. Indeed.
Your nature nurture environment. I think that you have to all right, even meeting client. Like I told my wife when I started going full time back to the office, I said, look, if I'm there, people come. Mm-hmm. They see the car.
Yeah.
Hey, can I? Yeah. I say, then I made it a little, more business. Let's make an appointment. Because I can't just have people knocking at the door. Yeah. But now I have, all right, my Thursday, I have to be at the office. Why? I have 11 whatever appointments. Tuesday, if there's a graduation, all right, I can block it out. It wasn't looking busy anyway. But that has to be secondary. If you're, and this is advice that I've gotten and I will give you also. You're the CEO. So you have to do the CEO things and you can't always be available. And that's just what it is. That's what it is. That's what I mean. You want to live life on your own terms. These are the prices. So if you will pay it, then you're good. And you have to be cognizant of it. Like some people, I can't believe I have to talk to my accountant on a Saturday. I'm like, bro, who's going to do it? Yeah. Who's going to do it? Yeah. Who's going to care like you do?
Yeah.
Nobody. So
no.
Yeah, that's the good and the bad.
And when you find people who do,
be wary.
Be wary. No, never let them go.
Oh, good people we mean. Yeah, good people. Yeah,
never let them go.
Good people are hard to find.
Yes.
Yeah.
People who are going to treat your business like your own are hard, which circles back to the profit sharing program, the co-op. If everyone feels like it's their own, then that should change that dynamic. And it is. I already see it. We've only been, towards the end of last year when we started, and I already see the changes happening.
Really?
And I'm hoping in a couple of years we could sit down and it'd be a completely different environment.
Yeah,
Absolutely.
absolutely. I like that.
And as far as culture, yeah, it's different. Now we're doing a mixer in July.
Yes.
Bring everyone together. We try to bring everyone together a little bit more. We do a monthly meeting that we broadcast via Teams.
Yes.
And we also have in person. If you want to come in person or you're not, still there. We use Teams extensively and email distribution lists to keep in touch with each other and do things along those lines. We have done company trips in the past.
Oh, nice.
That was several years ago, actually before COVID. Just trying to build culture and things along those lines.
And that's a thing too. I mean, just taking the time to try to think of how you can engage with your employees on a different level.
Yeah,
that's a big deal.
And I think it's that's again a place you want to work.
Yeah.
How do you grow? You obviously want to work someplace that you're comfortable in and the culture matches you and fits you.
Right.
And that's what we're inspiring to do. And it is tough when most people don't, everyone's in the office together. Then it's very easy.
Yeah.
Yeah.
Put
a little putting green back there and,
or what's that called? The
foosball table?
Foosball, and there's another one. I forgot. What's it called? Ping pong.
Ping pong. Yeah.
Are you a proponent for fire fast, hire fast, fire faster?
I don't disagree with the idea. I've never practiced it. I'm very slow to fire.
Yeah.
Me too. Probably to a fault sometimes.
Me too,
I can admit that. That's perhaps to a fault sometimes. But I do believe, listen, if someone's a bad actor and doing the wrong thing,
that shit,
then no.
That's easy.
Then
It's really
fire.
easy.
Then yes, without a doubt. If it's going to affect your company and affect your clientele, then no, fire. Absolutely. But if it's something along the lines of they want to be here, they want to be a good actor, they're just missing a proponent of it, and they want to fix it, then no. Then there is a solution, and if we can fix it, we're going to fix it. We're going to make it better.
That's a deep dive, and that takes a lot of effort on your side.
It does, but just like anything, it pays rewards in the long run, right? Because when you do fix it, your company gets better.
Yeah.
That person gets better. If that person is incentivized, monetarily, which most people in our industry are, whether it be, processor getting bonuses or
whatever it is,
they will also see, more from that as well. So, it's, and I do see the benefit of hire, fast and fire faster.
Yeah.
But, I don't believe it's necessary. Again, unless it's a bad actor type situation, then that's a totally different story.
Right.
Or someone who doesn't get along with anyone.
Yeah.
There's no fixing.
They create disruption within the system. It's hard. It's easier to identify, and then you have to make a decision based on the whole compared to just you. It's not just me. It's if you don't get along with everybody else, then it's not everybody else. Right.
It becomes a situation like that. But again, if there's a way to fix it or help, then I explore that route first.
Yeah, I think I'm with you on that boat. I think that, but I also identified certain things lately that I'm like, okay, I can't do that. Like I can't do that. It's just not. I'm not doing it. It's just I could, but there's a point of diminishing return.
Yeah.
And then you have to, as a CEO, you have to identify that. And everybody's tolerance is different. Everybody's situation is
not
different.
every problem has a solution,
right? And not every problem is your problem.
Yes. Yeah. Absolutely.
I think we're going to the next podcast. Is how do you deal with the CEO?
How do you run a business?
Yeah, right. So if people need to contact you, please look in the camera and tell them where to get you.
Yeah. So, we obviously have a website, prudentialb.com. You can email, you can find us on social media, on Instagram or Prudential Borrowing. Probably easiest way to kind of explore us and see a little bit of our culture and what we're about. And we have some information on our profit sharing program and a residual income program that we've set up for any loan officers looking to make a move. That is on our social media. There on our website, you have a calendar to even set a calendar appointment with myself, and to reach out. We're very open to anyone reaching out.
Direct
clientele.
Direct access.
Yeah, and same with clientele looking for mortgages or help or mortgage advice, or even someone who just has random mortgage questions. We have our staff is here to help with anything along those lines. Because like I said before, it could lead to things in the future. You never know.
Absolutely. Leads to consideration. Right?
Yeah, absolutely.
Guys, ask Louis Omar everywhere. You know where to get me. Any questions you can ask me, DM me. If you need to speak to Eric and he doesn't answer, you can call me. I'll call him with you. And we're out. Thank you very much for your time.